Hello viewers, we'll be going over silver futures. In this video, we'll be going over the day-by-day probability model, the technical performance of each model, how we find the models, comparing the current trend with the trend in the past, and we'll go over the day-by-day forecast for silver futures. So back to the technical analysis, we're currently down 1.6% on the 1 hour chart. We are now approaching to negative MACD after being overbought on Monday and Tuesday. As for the 4 hour chart, what we have here is we are resting along the 9 moving average. We are most likely going to attempt to touch the 18 moving average, this purple line. We're so near overbought RSI, and we have since made a divergence on the 4 hour MACD. As for the daily chart, what we're going to experience is longs are going to make their covers, and we're still at overbought RSI, and we may drift a little bit lower to find temporary support, possibly around the 9-day moving average, this blue line, at around a price of $20.70. And that will be our first immediate support. And if we do manage to hit that support level, that is roughly around a price movement of 9% lower. So now let's head to the day-by-day probability model. These models are available in the link below, so do check it out. So as we progress to the 5th day, we have a 40% chance for silver to climb between 0 to 7%, and for the extreme case to the upside, 20% chance for it to climb between 7% to 15%, and to the downside of 40% to fall between 0 to negative 7%. So now let's examine the day-by-day forecast for silver futures. So what we have here is 1 day out, that'll be a Friday, and 2 days out will be a Monday, and so on. So we have 3 days out, 4 days out, 5 days out. Which one of these models we should focus on? Ideally, the model that is best matched to the current trend. The blue line is our current trend, and the line overlapping it happens to be the best match. So right here we have our current trend, and the trend below it is the line from the line graph that we found above. And let's begin comparing both trends. So on the current trend, we start off averaging above the middle Bollinger Band, dip slightly below to the bottom band, and touch the upper band towards the very end. And we had the same action here, average above the middle Bollinger Band, dump to touch the bottom band, and then touch the upper Bollinger Band towards the very end. What we have here is 1, 2, 3 points, and we also have 1, 2, 3 points. And there's reason to believe that the trends and patterns are somewhat the same. The outcome and forecast should be fairly same. And the model that we just examined was back in May 20th to July 5th, 2016. And if we examine back then, silver continued to climb around 50 basis points. If we examine back into the day-by-day probability model, that coincides with this standard deviation of 40% chance to climb between 0 to 7%. And if we examine closer on the technical performance of each trend, on the current trend, we're currently down 2% from monthly high, up 23% from monthly low, up 12% from 10 simple moving average, and up 18% from 20 days simple moving average. We don't have a 50-day simple moving average because we're only examining a 30-day trend. And now let's compare the current trend with the trend in the past, May 20th to July 5th, 2016. Back then it was 0% away from monthly high, up 20% from monthly low, up 10% from 10 simple moving average, up 12% or 13% from 20 days simple moving average. So among the two trends, there are technical similarities. And again, these models are available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.